Hey, what's up guys? It's Nix, and this is video 3 of 6. You guys know we're going straight into, well, not straight into it, but you guys know we're going into the juicy stuff today. I mean, the actual system in itself, SBT. And if you don't know what that stands for, that is Smart Breakout Trading. And what it is really just using liquidity and multi-time frame analysis. And that's basically it. And again, we're gonna go dive deep into it. And we're not just gonna cover the system in itself. We're actually gonna go a little bit deeper and just kind of, showing you a little bit of the simplistics of trading and what's a high, what's a low, and how to use higher time frame analysis, how to use multi-time frame analysis, and how to actually execute when the system presents itself. So with that being said, let's just go straight into it. I'm already recording here, got the charts up, and I'm ready to break this down. So as you can see, we're on DAX. And again, you guys can use this system for pretty much anything, but I mainly use this for DAX and UK 100, FTSE, and well, DAX. But that being said, we're going straight into it, and we're going to start the higher time frames. No matter what it is, no matter what the case is, I'm always starting on the higher time frames. We're going to remove a lot of these drawings. We're going to get right into it. Let's make sure we're on the right one. Perfect. So as you can see on the weekly, we are clearly bullish, right? The weekly it's not going to do too much, but it is still going to tell us a lot, right? What can we see on the weekly? We see prices bullish. We wicked this high. We didn't make a new high, and we seemingly are coming down lower. But as we feel this imbalance, we're respecting that. So there's really not much information giving us there yet. But as we can see on the daily, we did somewhat make a new high, came down, facilitated a pullback, and are seemingly coming back up, right? This is just really good information when it comes down to the lower time frames. And yes, it's not necessarily crucial, but it can help in some instances. So now that we're on the 4-hour, we can see that price is bullish. We had a pullback here, and we're seemingly continuing higher. So if we just use our drawing tool, we can see that price should, in theory, continue to go up and break that high, right? As we go down, again, that's the 4-hour. We can come to the 1-hour and see, okay, where is price? What is price doing at the time? Let's go back a bit. Where is it? So before London Open, and if you guys don't know, I trade London Open. And again, you want to be session specific, I'd say, with SPT, just because again, you are trading breakouts, you want to use volume, you want to see a lot of volume typically. But going back to it, the hourly, as you can see, one, remember the 4-hour expecting it to go higher, and two, we see the hourly going higher as well, right? We see that impulse, but with an impulse and a new high being made, you always have to expect some type of pullback on any time frame, right? So with the understanding that price can pull back on the hourly, this is where this is crucial. This higher time frame is crucial because now we know, yes, price can continue higher, but we also know price can come down and come into this area of imbalance to fill that before it goes higher. So as we go down to the 30-minute, we can see, let's go to the 15-minute. London has not opened yet. So we can see Tokyo sessions here. And as of right now, we have our bias as far as price potentially coming down to take that, but we need an entry. What's our entry looking like? Our entry would be a breakout, a break of a low. And what do we see here? We see a pretty strong low. And what do we see at London Open? We see London Open come down, break that low where I would enter. And I did enter here, actually. Stops would be at the high. And we'd be going for a 101. Right? And we know that this imbalance should get filled in theory. And as price continues to play out, we can see it stretches out a bit, but it hits our area, right? And if we continue to play out, we'll see what continues to happen. Does it end up going back up? It may not have. Let's see. Let's go to a higher time frame. I just want to see. Well, it's taken a while. It didn't. Right? And again, that goes to show that even though we expected price to go higher from a 4-hour standpoint, it doesn't necessarily have to. Price was flipping there. And that's where you could have potentially held longer on this trade. But granted, it wasn't necessarily expected that price was going to make that flip. It wasn't. But that's a whole other video. But going back to it, let's go over the key points again of this trade. So let's go back. And again, I know we just dove right into the system, but that's fine because we're going to go back out, break it down a little bit, and go over the key ideas. Remember, breaking it down from a lower time frame standpoint. We're looking for a breakout. We're waiting for London Open, and we're waiting for a break of a low, some type of support, some type of resistance. In this case, it'd be a support because we're looking for sells. And again, we get that. We got a break of support. We entered stops above the high because we know that price could potentially come up and facilitate a pullback within that lower time frame leg. And again, it kind of did here, but we were safe because of our stops. And TP was hit. Again, there's really not much to it because it's so simple. SVT is so simple. And again, it's really just understanding one higher time frames in the sense of the 4-hour, just based off direction, we can expect it to go higher. And again, I know I took sells, but this is still crucial because I'm expecting it to go higher. And in expecting it to go higher, I obviously have to expect price to clearly trend in, in a bullish direction, where in this case, if price were to continue to trend, I don't think it's going to continue to pump forever. In some cases it can, but in most cases it's going to have these pullbacks and these continuations as price continues to trend on the higher time frame, right? Obviously we can go into a different example, and I think I kind of want to, just because definitely could find something a little bit better too. And again, it's so simple where I can just come over here and just see what price is doing. Here, boom. Alrighty, so right before London, let's go to a higher time frame standpoint. What can we see? Off the bat, we can even go to a higher time frame. The 4-hour time frame is bullish, right? We see this new leg being formed, okay? With that being said, with the new leg being formed, we know that price needs to what? Have a pullback. It most likely will. And what could help us kind of assume that price should come lower is also the fact that price left this fair value gap down here. Again, it's called a fair value gap, imbalance, inefficient price. All three of those things are the same thing. So again, you'll hear me say imbalance, but it's also fair value gap. But with that being said, it's the same thing. It attracts price. Price will be more likely to come down into the area because there was imbalance left in the market. And not only that, again, we made a new high, right? So as we come down to the lower time frames, if we can start identifying internal structure starting to flip, that's where we can then look to capitalize on these sells, knowing that price should facilitate a pullback. Another key point going back to the 4-hour is also using the fib, right? The fib is super crucial in just having accurate levels on where price should come into. If price is going to sell off here, it should at least come into the 50%. And honestly, it could rip from that point. It could. But again, we have that fair value gap in our advantage to kind of tell us that price should come a little bit deeper. Again, that could help on RR, or that could help with another trade later on. But going down to the hourly, what can we see? We see price is, again, not London open yet. We're clearly trending within here. We're kind of seeing some new lows being made. We just took Tokyo highs. And again, this is a really big point too, is I like seeing liquidity being taken before I enter. Again, you want to see people get taken out before you enter. It's just how it is. Someone has to lose in order for you to win. But again, just seeing this, a sweep of Tokyo highs, which if you guys don't know, session highs are super strong. And the reason being is because typically there's a lot more buyers and sellers at session highs and lows. And again, that's that, right? We can also go down into equal lows and all that, but let me finish this. With that being said, we took some liquidity here, and again, we can continue to go down to lower time frames. And what would we be looking for? Just a simple break of a low. That simple, right? So once London open comes around, what do we see again? We see price come up, take some more liquidity, and then what do we see after that? Price breaks a low. We would enter. And going back to liquidity, this is a liquidity point. And it may not be equal lows, but at the end of the day, it is a low. It's a structural low. And as you can see, there's clearly an impulse at this point, meaning someone had to place buy orders there, meaning their stop orders are there. Therefore, it is just a confluence for us to give us confidence in taking this trade. So as you can see, we'd be going for the breakout, going for a quick 101, and let's wait for price to hit it. Boom, there it is. And then price flew. I mean, you can see price came back, retested, and what did it do when it retested? We're going to go into that as well. But as you can see, you could have caught a bigger move here as well, going back to the higher time frames, because if you remember from a higher time frame standpoint, we were expecting price to facilitate a pullback within this area. It went even further than that. If we went to an even higher time frame standpoint, to the daily time frame, we could see that we could have potentially marked up this daily leg and could have caught all the way down into that equilibrium. We could have done that, right? Granted, it's not always going to be like this, but in this case it was, right? Where price flew through that area and continued lower and lower and lower, right? But going back to our initial entry point, we entered here, but there was another entry point too. I'm an aggressive entry type of person. I like to enter aggressive. But as you can see here, what did price do after breaking? It left some imbalance, left this order block. Price made a new low here, came up, facilitated a pullback, as you can see. And where did it facilitate a pullback into? One, that imbalance, and two, into premium pricing, at least into the equilibrium. And then from there, as you can see, price dumped off. So you could have, again, used the SBT model to identify price was overall bearish. We are still staying within that bearish structure. And once we got another break of that low, that's another entry point. And this one would have fucking ran, especially if you didn't have stops open, or I mean TP open. You know what I'm saying? But with that being said, again, this is super simple, guys. SBT is not hard. It's probably one of the simplest models out there. And I know you guys probably haven't heard of SBT, and it's because I don't talk about it. It's my system. But now I want to share it because I've been absolutely killing it. And it's just the understanding of multi-time frame analysis, using that, plugging that into our lower time frames, using lower time frame structure to confirm price or to give us confirmation on entry. And we're entering at London Open. And the reason we use London Open is because there's a lot of volume during London Open. And I like that. I like that volume because typically when I see price push in a certain direction, especially with my higher time frame analysis being so strong, I win. I'm serious, I win. And again, like anyone, like any system, there's going to be losses. That's where risk comes into play. Risk is super important. And again, that's where we're going to have later videos as well. This is just a quick breakdown on how to actually trade my system, what to look for, the higher time frames, how to go down to the lower time frames. What exactly am I looking at? Why did I take this? Possible re-entry points. And again, guys, I'm still getting data, right? This is a system that has been working for me for the past year, but at the end of the day, I'm still getting data because I can still make this better. I can catch bigger trades. I can have less losses. And I'm not just saying this for me. You guys can do the same thing too, no matter if you're using my system, SBT, or if you're using another system, because at the end of the day, data is key. I kid you not. It'll take you to levels that you did not think you could get to just because you're able to sit down, identify what you're doing wrong or identify what you could be doing better, and you're actually doing the work to make sure that you can get better. And again, it's really that simple, guys. I mean, there's really not much more to say here because the understanding of higher time frames, super simple. The understanding of multi-time frame analysis, super simple. There may be some key points where you guys are like, but that's where you can ask me questions. That's where I also have my mentorship where you guys can work with me one-on-one. And again, that's why a lot of the students do come and work with me because yes, they're able to learn a lot from here. They are, but being able to ask questions and have me one-on-one 24/7 access is very, very helpful. Again, I have a video for that if you guys want to go watch that. It's down below, mentor versus without a mentor. And again, you guys got to remember, I didn't have a mentor. I didn't. I went through this journey alone, but I still did it. And now that I am able to help people, I can only tell you what my true opinion is. And that is, yes, mentorships can help. It's a transfer of data. That's all it is. It's someone taking their years of experience and giving it to you in a matter of weeks or months. It really is that simple. You can speed up your journey, but that's another conversation. I really want to go back to this for my last point. So we went over everything, higher time frame analysis, price action, lower time frame structure, and just the overall entry of waiting for a break of some type of structural low or high. I know both of the examples were sells, but it'd be the same thing for buys. Again, if we see price in some type of overextended leg, this is just to break it down to be, a very simplistic breakdown. If we're in a bearish leg, we see lower time frames start to shift into some type of internal bullish structure. We know we could take a breakout of this high right here. Why? Because we know that price needs to facilitate the pullback, and price is starting to shift bullish within this internal structure. And again, in most cases, price will go in our direction and then continue within that bearish structure, right? And that's where, again, risk comes into play, having appropriate TPs, appropriate stop losses. But as price continues down, you can either catch it back down at a break of a support level or just play the pullback back up. That's all I do, guys. And it's really that simple, that simple. But like I said, go down below, check out the videos that I told you guys to watch. They're super helpful, just like I hope this one was, in just giving you the idea of what SBT is, what I do, how I look at higher time frames, why I enter. And in the next video, we're gonna go even more in depth on my system in itself. Higher time frames, confluences, risk. We're gonna go even deeper as these videos go on. But as video 6 comes around, that'll obviously be the best video. With that being said, this was video 3. I appreciate you guys for watching. I'll see you guys in video 4 of the series. I'm out of here. Later.